house rent allowance. So now what is the house rent allowance? What is the meaning of the house rent allowance? The who provides the house rent allowance to whom? So these are the questions. We will get this answer of these questions from this. The house rent allowance. What is house rent allowance? House rent allowance is given by the employer to the employee, and houses allowance is a part of salary and therefore it is initially considered as taxable salary income. However, if one lives in a rented accommodation, one can claim a tax exemptions either partially or wholly under section 10 subsection 13A of the Income Tax Act 1961. This is popularly known as the HRA exemption. If you don't live in a rented accommodation, this allowance is fully taxable. So, and the tax exemptions of house rent allowance is not available in case of a person who has take the new tax regime. But in case the person choose the new tax regime, then the house rent allowance exemptions will not be available to him. So 10 subsection 13A will not be available to him. So in this case, the employer provides the housing allowance. So housing allowance is the part of the salary to the employee. And in this case, the part of salary, then and in this case, then the persons will get the housing allowance and he will get the deductions under section 1013A. And in this case, to claim the housing allowance exemption, you must meet the following some condition. What is this condition? If the salaried person gets the HR exemption, then he will live in a rented accommodation. And number two, he will receive the HRA house rent allowance as a part of your CTC, simply compensation to the company. That is, that since the salary is the expenses of the company, so this is the compensation to the employee by the employer, by the company. So this is called CTC. And submit the valid rent receipt and proof of the rent payment. So in case of get the HRA exemption, employee should live in a rented accommodation. He will receive the HRA as a part of this CTC and submit the employee should submit the valid rent receipt and as a proof of rent payment. So if these three conditions are satisfied, then HR exemptions will be available to the employee. Now, what is the formula and how it is calculated? How the HR exemptions will be calculated? There are two types. One is the HRA, that is the HRA house rent allowance received by the employee. If the employee resides at the metro city, then the exemptions will be there. And if the employee does not reside at a metro city but he lives at the other cities other than the metro city, then person will be get the separate HRA exemption. Now in case the employee resides or lives at the metro city Delhi, Kolkata, Mumbai and Chennai, then the calculation will be like that. HRA actually received for the relevant period less exemptions under section 1013A, being list of the following. 1. HRA actually received for the relevant period. Next, rent paid less 10% of salary for the relevant period. Therefore, actually rent paid by the employee less 10% of salary for the relevant period will be less. Then this amount will be here. And 50% of salary for the relevant period. 50% of salary because the employee resides at the metro city, that is Delhi, Kolkata, Mumbai and Chennai. So if A, B, C, then the list of this amount will be allowed as an exemptions under section 10 subsection 13A from the HRA actually received. Then the balance amount will be the taxable house rent allowance. Here the salary, what is the salary is mean? 10% of salary or 15% salary is there. So what is the meaning of the salary? Salary means the basic salary, dearness allowance if provided in terms of the employment and commission as a fixed percentage of turnover. So salary means basics, DA and commission. So here the dearness will be there is also condition. One, if it is provided in terms of employment, and commission as a fixed percentage of turnover. If it is in percentage, then it will be added with the salary. So the three component of the salary for calculations of 10% salary, 50% salary. One, salary means the basic salary, dearness allowance and the commission. And in case relevant period means the period during which the said accommodation was occupied by the assessee during the previous year. So if it is by the assessee during the previous year, so this is the relevant period. If the employee received, if the employee resides at or live at the other cities, that is other than the metro city, Delhi, Chennai, Kolkata, Mumbai, the other cities, Kanpur and Midnapur and it also like Allahabad. So these are the other cities. So HRA calculation will be same except the in case of 50, point number C 50%, here will be 40%. So only this will be changed, other will be remain same. Then other cities, the HRA actually received for the relevant period less exemption under section 1013A being list of the following. The A, B and C list of the following HRA actually received for the relevant period. Rain paid less 10% of salary for the relevant period and 40% of salary for the relevant period. Therefore, among the three which will be list will be taken as an exemption. So then balance amount will be taxable house rent allowances. Salary means this, and note number two, relevant period means this. So this is the formula or the rule for calculating the house rent allowance exemption. And here I have given an example, and in case of the example that Mr. Raj Kumar has the following received from his employer: basic pay 40,000 per month, dearness allowance DA 6,000 per month, commission 50,000 per annum, motor car for personal use expenses made by the employer 1,500 per month, house rent allowances 15,000 per month. Question number 2, question number A and question number B. Find out the amount of HR exempt in the hands of Mr. Rajkumar, assuming that he paid a rent of 16,000 per month for his accommodation at Kanpur. DA forms part of the salary for retirement benefits. Mr. Rajkumar exercises the option of the shifting out of default tax regime provided under section 115 BAC 1A, and that means in this case the if the employee follow the old regime, then he will get the HRA exemption. If he follow the new tax regime system, then he will not get the HRA exemption. So in this case, he does no he Mr. Rajkumar exercised the options of the sitting out of the act out of the default tax regime, that is old system provided under section 115 PSC 1A. In case question number 2, what will be your answer if he takes accommodation as rent in Mumbai? Now here is the place is the where the place is I think Kanpur is there, place is Kanpur, but if it is Mumbai, then what will be answer of exemption? So find out the HR exempt in the hands of Mr. Here, it means that the part of rent for his accommodation at Kanpur. So Kanpur is the place. So first of all, we have to calculate the HR exemption based on the other city, that is Kanpur, and then we have to calculate again on the basis of the Mumbai. So there will be two questions and two sets of answer will be there. Now, tax exemptions of house rent allowance is not available in case you choose the new tax regime. If a new tax regime is there, then house rent allowance exemptions will not available under section 10 subsection 13A. HRA exemption. Now, if it is the HRA exemption is there, suppose there are some employee self-employed persons are there, but he takes a recommendation on rent. Then since he is not a salaried person, then if the salaried person, so he will not get a salaried person. So if he will not get a salary from the employer, so house rent allowance would not be available to him. But in this case, but he will get the deduction under section 80 GG. Therefore, individual who are self-employed cannot claim the HRA because he is not the employee of any other employer. So he is not the employee of a employer. So there is no relationship between employer employee relationship, because he is a self-employed person. So if he takes a accommodation on rent, then he will not get the HRA. Instead, he will get the deduction under section 80 GG. So in this case, what will happen? The deduction will be under section 80 GG. The list of the following: rupees 50,000 per annum, 25% of adjusted income, and actual rent less 10% of adjusted total income. So here the adjusted income is calculated like this: total income less long term capital gain less short term capital gain under section 111A, income under section 115A or 115D, and deduction under 80CC or 80U, except the deduction under section 80GG. Then I have get the adjusted total income. Here the adjusted total income is calculated. So 25% adjusted total income or 10% of adjusted total income. Then we will get the deductions under section 80GG. In case of the person who does not get the HRA exemption because he is not an employee. If he is not an employee, then he will get the deduction under section 80GGA. 80GG.